At this point, Tony, it's just me and you talking. Nobody else. Let's play this dumb video.
Data shows that GameStop's short interest keeps on falling over the last 2 months from nearly 20% now to just over 16%. This on top of the exciting news that I brought you guys yesterday that over the last 12 months, institutional ownership of GameStop has driven up over 100%. Are the shorts finally on the run? Has Wall Street finally figured this play out? Are these shorts nervous ahead of the upcoming Q2 results? We're going to talk about that in this video. Let's get right into it. Happy Monday, guys. Let's get right into these GameStop numbers. Here on the short interest data table, if we look back in mid-June, the short interest was as high as 79.5 million shares. It has dropped now dramatically all the way down to 67.9 million shares. On top of that, look at this short volume, a huge decrease in the reported short volume, whereas before in just even late July, we had numbers 66% of the total short volume reported. Now it's dropped all the way down to 35%. Have the shorts abandoned GameStop? If that is the case, I'm here to tell you that is good news. Posts on X are
I'm here to pause it. I'm here to tell you, Tony, you don't get to do this. You're talking out of both sides of your mouth. Just a week ago, 2 weeks ago, shorts are not scared of this stock. Shorts are never going to be scared of this stock. They're never going to leave. They're always going to be. And I'm just like, what are you talking about? Like, I really don't care. I mean, they all left or they're walking out the door. Their marching orders are happening right now as of August, right? Go ahead and look at the chart right there. You see a massive volume day, the last day of July, and then August starts, and there goes all your total short volume, which you've always said, this doesn't mean anything. Total reported short volume doesn't mean anything. You've always said this for years and years and years. It doesn't mean shorts are trading or not trading. You could trade the same short share 1,000 times and it wouldn't matter because you wouldn't know what is short and what's not. And that's what I'm here to tell you. Tony, you don't get to tell us that all of a sudden you've figured this out. This is what's happening. It's going up in institutional ownership and it's coming down in short. Yes, that's what's supposed to happen, right? But you told me that the bondholders are not scared of GameStop and that the bondholders bought bonds to short GameStop because that's the play, right? That's the net delta position they have to have. Let's go ahead.
Buzzing and social media sentiment is high going into this Q2 earnings, especially considering some of this data that we went over here just in the beginning of this video and yesterday on the video I provided you for GameStop. This is a significant pullback in short selling activity at GameStop. Is this a sign that the shorts are easing off, possibly spooked by Ryan Cohen's strategic move to build up that cash, that liquidity on the balance sheet, the Bitcoin purchases that he's done, or are they spooked by the specter of a beat on the Q2 earnings, which we're going to find out about in just a couple weeks? Could this shift in the data be a signal that the bears have lost the willpower to short GameStop? A change in the strategy, if you will. The stock up today on Monday, almost 0.75%. Closing at $23.11. However, it should be noted with 67.9 million shares short, that's still a significant amount of money on the line, almost.
So you realize we get our short information 2 weeks late, right? Like everybody knows this part. And in this case, GameStop actually lowered short positions as of like a month ago, not just recently. If you look at this right here, they had a short position change of 200,000 shares. In the last 15 days, they've actually gone out. Where was this video last? Like 2 weeks ago, 3 weeks ago. Oh, because you didn't have the institutional buying part of it. You just had the short part of it. That's an institutional increase, right? You see how you do this, Tony? You skew your information for the data that you're finally given. Me, I'll give it to you 6 months ago. 6 months ago, shorts wanted every way out of this position. They want no part of this. Why? Because GameStop's now profitable. GameStop has what? Almost $10 billion in the bank? They will. And then what are you going to do? You're going to tell me that it's still not bullish? Oh, no, but you double talk again. We'll go ahead and keep watching.
$1.5 billion bet against GameStop. Granted, some of that is the delta hedge put in place by the holders of the convertible bonds. Maybe the
delta hedge of the convertible bonds. I have to hear this every time. Guys, can I tell you something? Let me save it for the end of the video, because the education part of the video, I'll do at the end, Tony, since you never do this. Since you're on one way of thinking, young man. That's what you're on. That's your wavelength.
Very large percentage of that short interest. And that is not a directional bet against GameStop. That is just risk mitigation for that $4 billion of debt that they have on the line. And
so where's the $4 billion of a short position? If they lent out $4 billion, where's the $4 billion short position? If that's what it is, if it's bond arbitrage and they just want to be net zero, tell me. Oh, it's not there?
I think about that, then the next thought I have is, the shorts willpower has just been destroyed in this play. The only ones really left in the trade are the ones that are protecting their bond bet. I still think that in the weeks leading up to the Q2 earnings here in 3 weeks or so, we have a good chance of continuing to see this bullish momentum on the chart. And keep in mind, as that price of the stock goes up, these convertible bond holders will increase their short bet. The short interest would go back up if the price of GameStop goes up. That is just how the delta hedge works. They're not trying to take a bigger bet against GameStop. It's just a larger hedge is needed to do the delta hedge properly. This is all finance math. We've gone over it numerous times.
So how often do you think this is going to happen? Do you think it's just going to balance out their book? I mean, you're already not making sense by being on the downside of it. Give us $4 billion. Where's your delta hedge there? As the price goes up and elevates, are they on the hook for this? They're not, right? The conversions are. But I'll explain bond arbitrage. I'll explain the bonds to you right after this, because Lord knows you're in a think tank with some guys in your Discord and they're telling you what this is or what happens in this case. You're so uneducated about this.
On this channel in the past couple months, and I'm not going to repeat that and bore you again today, hammering home that topic. But go watch those videos if you want to get educated beyond the hyperbole, the hype, the hopium, and the nonsense put out by other folks on social media, and really learn what the convertible bonds are thinking. I've got a lot of great material put out there on YouTube for you guys to help educate you. Just go back several weeks, several months, and watch those videos. Look at the links provided in the video descriptions. The Q2 earnings are going to be a pivotal day for GameStop when we get there, because that is when we are going to find out, were they able to increase revenues year over year despite the company continuing to close stores?
See the narrative they're already painting? Are they going to increase revenues? Of course they are. They already have increased revenues. Did you know they actually make more dollars per man hour, per store, per square footage, per everything? Every metric you want to measure. They make more money right now. But they've closed, what, 1,400, 1,500 stores over the last year? And you're going to tell me what now? Well, look at the top line. Look at where it's at. Yeah, look at it. But then look at it. Look at how they closed all of France. I'm talking about hundreds of stores. How they closed all of Canada, over 700 stores in the nation right here in the U.S. So everything that they've closed, and yet they're going to come out on top. That'd be a sight to see, wouldn't it?
Has the collectibles business been positive enough to continue to positively impact margin contribution, and did switch to make a meaningful contribution like some are alleging out there on social media? These are all important things that we're going to find out. And when we do, good or bad news, this stock is going to move one direction or the other. Cost to borrow remains low, meaning there is a lot of liquidity if you wanted to borrow to go short on GameStop. Again, more evidence that there are no shorts trying to enter this play. If there were a lot of shorts clamoring to short GameStop, you'd see that cost to borrow go higher and higher. And that is really one of the main things that I focus on any ticker, really, is the cost to borrow fee high. That is very important data to look at besides just considering.
I mean, if you were just to talk like a regular human, I would have a conversation with you, Tony. But every time your infliction on words and phrasing, it's just not normal. You don't have a normal cadence. This is why you didn't make it in acting either. But when we look at this, just so that we're clear, you're trying to give us guidance on what you look for in other tickers. I've yet to see you be successful in any ticker. So I don't know why you're going to tell me what you look for in, this fee of borrowing shares. It goes up. So if GameStop's price goes up, right? And then, of course, more people want to short it, then there should be an increase on cost to borrow as well, according to you. I'll be waiting.
During the short interest, low cost to borrow, not much interest from shorts in currently shorting the play. And, if there is good news, then you get to keep on having the stock price go up. If there is bad news, it's cheap to borrow and they likely would pile on really, really quick. That is the fun, the speculative bet that we have here in GameStop. I cannot tell you what is going to happen, so make your own choices and own your decisions. It is just too hard for me to call with any certainty. With all the changes that the company is doing, very good changes, cutting costs, cutting locations, necessary changes. It's tough. It's tough to accurately guess the revenue or even the margins. And it has been amazing work that Ryan Cohen and the team have done over the last year or more than a year to get the ship from sinking. And now that they are floating, can we start really getting some momentum in the stock?
The ship was never sinking. It's easy to call these margins and increases and showing you the percentage of increases. Right? I've been doing that for 4 years? Even when I was faced with the fact that you told me I was wrong and I'm a liar or I lie to people about the info. No, I just see the info different than you do. That's the difference here. Like, I can see transition and change well before it's ever printed on paper. That's the difference. That's why you're not in at $10. That's why you're not in at 15. That's why you didn't buy any shares for 2 years and you magically are at 21. You say, but here's my bet with you, Tony. I'd love to see the position you claim you have. Like, go ahead and show the world how much you believe in your videos and how you're bullish about GameStop now. Show me the fruits of that bet right now. I mean, shit, it's $23. I'll show you a $30,000 position in GameStop and you'll show me what?
With better margins, higher revenues. That is what remains to be seen, and I'm here for that ride. The big thing that I hear from you guys over and over is, we don't like the official data. Tony, quit talking about the exchange reported short interest.
Nobody's ever said that to you. Like, you don't have people that watch you other than me, basically. But no one talks to you, Tony, about GameStop. You're not a GameStop guy. Your whole channel's not GameStop. Your channel's AMC. It failed, and now you're trying to pivot. You're the worst at it. But yeah, no, we don't care what the number is. Guys, people involved in GameStop and the company and the investment, they don't give two shits, bros, about the short position. If they want to short, let them short. Apparently, they're going to keep short. Who cares? The company is doing better. That's how my investment does better. That's all I care about. GameStop and the positive things that are happening to it fundamentally for like 4.5 years.
We don't believe it. That is fine with me if you guys don't believe it. I think that as a reporter of integrity, it is important for me to talk to you about fact-based data. And this is the data we have. And the short interest is going down. So love the data or hate the data. The data's here and we're going to talk about it. What you decide to do, trade on data or trade on what people on social media tell you without any facts, that is up to you. I am bullish on GameStop based on the fundamentals and the cash that the company has sitting on the balance sheet as a potential powder keg that could ignite better and better earnings if it is properly invested. That is my speculative bet on GameStop. Let me know down in the comments, what do you think about the short interest, and are you riding with Ryan Cohen? Thank you for watching, and I will see you on the next video.
I hope on the next video you come out with a new idea of how this play works out for you. You know, Tony, what's going to happen is you're going to learn something. I mean, even in the moment. I'm not a genius. I'm just a dude who loves GameStop. And I talk about it, and I give you the viewpoints, and you bring up stats, and you bring up fundamentals, right? Like, I'll give you one that you brought up to me, and you were like, oh yeah, Marantz, these are the metrics that I care about when I measure GameStop. And you showed me this. You paste and copy this, and you go, return on equity, return on assets, return on capital. That's what you did. And all while you're showing me what they currently are, it's like you forgot that I was the guy telling you GameStop's a profitable company back when they had return on equity, negative 37%, negative 21%. Now we're positive 6.62. Why is that so significant, Tony? Because not only is it a swing profit of around 28% on return on equity over the last 2 years, Additionally, it's over the 4% of just interest, the money, the cash that's just making interest, and you give it no valuation, right? But we're getting 2% on equity deployed, you know, above the interest rates. So here's my thing to you, Tony, because I want you to expand the way that you think, because you don't think correctly on the bond offering. See, GameStop is a very volatile stock to some. Certainly if it's in your portfolio. The 52-week high is around $35 and some change, the low being 19, and we're at 22, 23 right now. So we're on the bottom half of that spectrum. And if you wanted to avoid the volatility of any stock, do you know what you do if you're Wall Street? You buy a bond. You buy a bond on the underlying asset. That convertible bond is a call option. It has a convert date. It has a convert price. But you're not exposed to the volatility of the everyday market. Nope. And yes, you can make money top and bottom, but the truth is you buy a bond and you give money to the company so you're not exposed to the volatility. That's the truth. Do you see Michael Saylor? Michael Saylor is issuing bond upon bond upon bond upon bond. And do you know what people are doing? They're going, I'll buy them all. You know why? Because they don't want the volatility of Bitcoin. That's why. The stock can go up and down. The stock can do whatever it wants, right? But you want exposure to that one-to-one. The man gave you his word. So you go, you know what? I'm going to do it this way. I'm going to go ahead and offer money on a bond. And then all I have to do is sit tight. It converts at this price, and here's what I'm paid. Well, in the case of GameStop, GameStop doesn't have a preferred equity unit. They don't have a dividend. They don't have any coupon. All they're saying is, here's what we're going to give you. We're going to go ahead and give you a convert at 29 plus on a premium for you. We'll give you 30% on a 3-year stretch. Those call options never expire because they're convertible bonds. They don't expire. You don't lose any money. Imagine if you were Wall Street and you're trying to hedge a position that you might have, a short position that you might have. You have to find a way to get shares. You got to buy calls. And guess what? Your calls expire. You miss out. Boom. Well, here's the safest way to protect your downside. Let me give the money to GameStop. GameStop's going to increase in value, right? The cash pile that you're talking about is there. Let's increase that cash pile. Let's 2x it. GameStop has its own $4.6 billion, which they do have cash themselves. That's the shareholder equity you see. Now you go over to the sheet, you 2x it. Now they're at 9.1. They sell off whatever they're going to sell off. They cut where they can. Now you're at 9.4, 9.5. They make some money. They make some interest. The next year, boom, here we go. Now we're at $10 billion. And you're sitting on a bond that has a convert at what? 30% on the $29.85 that you loaned out. So then you're sitting there going, I'm at $38 a share. And I'm going to get these shares, and I'm going to be able to. But GameStop has the keys. They get to decide how they pay it out, whether they pay it out back in cash or they give you back shares. The guys want shares, young man. Open up your brain to this, please. The way you get exposed to a position, certainly a position that is increasing in institutional ownership, decreasing in shorts, is by offering a convertible note and buying that note, because it's not open to the volatility of this market, whether it go up, down, or sideways. You'll figure it out. Or maybe you won't.